This is amazing. It sounds simple, but there is a massive need for it. So simple, there's a massive need. So even if accountants now can just go out there and start going to their clientele and say, listen, hey, we've got an extra service, which is a concierge service, where we will come in and look at your overall operation, see what's going on, and create some sort of a process for you on what to do. And you just have us, and we'll give you regular catch up every fortnight or whatever to help you optimize your finance, to make sure there is no leakage. Just even accountants can literally 5 times 20x their business by adding what they already do, but be more intense, I think more purposeful in terms of delivering that.
Look forward rather than looking back.
Correct. Yeah, because that's what accounting is all about. They basically do the tax return when all the damages and all the stuff has already been done and gone, okay, what can we rectify? Well, you can't do much anyway. The action has already been taken. But rather than looking back, as you said, why don't we look forward? Why don't we have plans in place in terms of what we want our BAS to look like, what we want the trajectory to look like, how much do we want to pay to the ATO? Do we expect, are we expecting such a large amount of money coming in? How do we want to disperse that? Should we be reallocating that somewhere? Not that we get it, then we spend it, they'll say, okay, how can we get some money back? Or how can we avoid paying taxes? Well, it's already done. Got it. I love it. I love it.
Interesting you say that, though. I have a friend who runs a very successful accounting business in Ireland, and he says that his job is to maximize his client's tax bill because he maximizes their profit. So many accountants go, we'll help you minimize your tax bill. And he says, no, I'll help you maximize it by growing your business and making it huge and successful. You're going to pay a lot of tax, but you're going to make so much more money.
That's amazing. But that's a whole different way of saying that, actually, because I've never actually had an accountant saying, I will help you maximize your tax bill. That's, wow.
Yep.
David, you are dropping nuggets here. I don't know if you know what you're doing here. You're just dropping gems, gold. Literally, guys, you can take this information and run with it. I can promise you, David can't find you and invoice you. This is free information that is being set out here. David, my next question is, you've got this methodology, which is called the FACE: fund, acquire, consolidate, exit. How do you mentor founders through each stages? Could you talk us through that, please?
Yeah. So first up, the FACE methodology is set out in detail in my book, Add Then Multiply, which is available worldwide through Amazon. It's available in paperback, on Kindle, and on audio. Sales pitch over. So yeah, I basically work with founders and look at where they want to grow, what they want to do to their businesses. You can come into the process anywhere in the process. So I have clients that sometimes come to me and say, I'm starting to think about exiting my business. What do we do? And so we just focus on preparing them for exit. But if we start at the beginning, kind of working through each stage. So the fund stage is all about where can you bring additional money into the business. And here I'm not talking about specifically growing your sales or anything like that. I'm actually saying, can you raise debt funding? Can you go out and borrow money from someone? Or can you raise equity funding? Can you sell a stake in your company to an investor who will then put cash into your business? And the beauty of having additional cash in your business compared with being a bootstrap business is it allows you to do things so much faster. You've got the money, you can go out and hire the teams. I remember advising one client on this, and we had raised some money, and he said, to really make this grow, I want to have the best salesperson I can get. And I said, oh, who is that? And he said, oh, it's this guy. And I said, well, let's approach him. And he said, no, we can't afford him. And I said, look, we've just raised a ton of money. Of course you can afford him. So they went out and bought and interviewed and hired the guy. And yes, he was expensive, but he brought in tremendous value.
Wow.
So there's a bit of a mindset shift that you have to go through when you've raised capital, because typically what you're doing when you're raising investment funding is you're going to either a lender or an investor and saying, this is what I want to do. This is the money I need to do it. They provide the money for you and you execute it. So know what you want to do and go out and do it.
Fantastic. So that's funding.